Hello friends, welcome back on Monsi's Podcast. Imagine standing outside a shopping mall. One shop is completely empty. Another shop is crowded with customers. Which business would you trust more? Most people would choose the crowded shop. Why? Because activity creates confidence. The stock market works exactly the same way. Price tells us what is happening, but volume tells us how much conviction is behind that move. Today we're going to learn a powerful truth. Price may tell the story. Volume tells whether the story is believable. Many traders look only at price. Professionals study both, because volume is the market's heartbeat. And when you learn to read that heartbeat, you begin to see what most traders miss. Let's start with the basics. Volume simply means how many shares changed hands. Suppose stock A rises 5%, but only 100 people traded it. Now suppose stock B rises 5%, but 10 lakh shares were traded. Which move is more trustworthy? Usually the second one, because more participants agree with that move. Think about an election. If one candidate wins with 10 votes, the victory means little. If the same candidate wins with 10 million votes, that victory becomes meaningful. Volume is the market's voting machine. It reveals where attention is flowing, where money is flowing, and often where opportunity is flowing. Now let's discuss one of the strongest signals in trading: price rising, volume rising. Imagine a stock trading at rupees 500. Suddenly it breaks above resistance. At the same time, volume doubles. They are willing to commit serious money. This is often how institutional investors leave footprints. Large players cannot hide volume. They may hide their identity, but they cannot hide activity. When price and volume rise together, the market is shouting, something important may be happening here. These are the situations professionals pay close attention to. Now let's look at a warning sign. Price rises, volume falls. At first glance, the chart looks bullish. But beneath the surface, something is missing: participation. Imagine giving a speech. The audience applauds less and less every minute. Would you feel confident? Probably not. The same logic applies to stocks. When price rises but volume keeps shrinking, the move may be running out of fuel. Not every low-volume rally fails, but many weak rallies begin this way. This is why volume acts as a lie detector. It helps us separate genuine strength from temporary excitement. One of the most expensive mistakes traders make is buying every breakout. Not all breakouts are equal. Some succeed, some fail. Volume often reveals the difference. Imagine a stock trapped between rupees 950 and rupees 1000 for months. One day it finally breaks above rupees 1000. Now ask one question: did volume explode? If volume is 2 or 3 times normal, the breakout deserves attention. If volume remains weak, be careful, because many false breakouts occur when participation is absent. Professional traders love breakouts, but they trust only those supported by strong volume. Volume turns suspicion into confidence. Now let's discuss something many investors learn too late: distribution. Imagine a stock near its all-time high. Price appears strong. News appears positive. Everyone is excited. But something unusual happens. Volume suddenly becomes enormous. Yet price stops advancing. What could this mean? Sometimes smart money is quietly selling. Retail investors see opportunity. Institutions see an exit. Large volume without meaningful price progress can be a warning signal. It suggests supply may be overwhelming demand. The crowd sees strength. Professionals see distribution. And that difference can save enormous amounts of money. Think of yourself as a detective. Every day the market leaves clues. Price is the headline. Volume is the evidence. Suppose you see a breakout, a reversal, a trend change, a new high. Don't immediately act. Ask, what does volume say? Volume confirms. Volume questions. Volume warns. Volume validates. The best traders don't chase every move. They investigate every move, because the market rewards observation, not excitement. Let's conclude today's chapter with a simple truth. Price attracts attention. Volume reveals conviction. A stock can rise temporarily without volume, but sustainable trends usually require participation. Remember these 4 rules. Price up plus volume up = strength. Price up plus volume down = caution. Breakout plus high volume = confidence. High volume plus no progress = warning. Never let price speak alone. Always ask volume for a second opinion, because in the stock market the loudest voice isn't always the smartest. But volume often tells you where serious money is moving. Thank you for joining me for another episode of Monsi's Wisdom. In our next chapter, we'll discover how market leaders emerge before the crowd notices them. Until then, follow the trend, protect your capital, watch the volume. And remember, price tells the story, volume reveals the truth.